So very excited to be in Berlin today with Thomas, and we're going to be talking about B2B trade, and in particular B2B e-commerce. So when I walked through the alleys of the expo today, I think what I noticed was that 80% of the e-commerce was still B2C, but we're just at the cusp of a very big wave of B2B trade migrating online. So this is what we're going to be talking about today. What are the specificities, challenges of B2B trade and how it relates to e-commerce? If we can move to the next slide, thank you. So we'll be talking, and Thomas will be talking about what he sees as a banker in the economy on B2B trade moving online, and what are the challenges that people selling B2B face day to day. And then we'll show you what the most advanced B2B players do to solve those challenges, and talk about an e-commerce player that is using payments to optimize the client experience and grow faster in B2B. So without further ado, Thomas, over to you.
Yeah, no, thank you, Louis. So the slide is quite self-explanatory. What we see is that the B2B business opportunity in the online space is just massive. We expect this to end up 3 to 4 times the size of the B2C market. We have seen steady growth over the last couple of years. And when we look at the overall e-commerce value is expected by 2025 to reach $39 trillion. It's a mind-blowing figure. And the majority of this sales is or eventually will come from B2B business. So what we see and what is demonstrated here is that the online sales, the B2B online business is growing, starting to grow like the B2C has done some 15 years ago. It comes with a delay, but it comes with force. I think we all are well experienced in buying online, how convenient, easy, and also secure the process is. And this has developed a whole infrastructure of suppliers like a Shopify, a PayPal, Stripe, Adyen, that makes e-commerce for us as a consumer so easy. Same is now happening in the B2B space, and this is what we're going to discuss today. It's important to know that B2B online sales are different to B2C. And we have identified 4 core pillars that we want to focus on today to demonstrate why that is different. For one, the transaction size is typically larger in business-to-business operations. This brings the need for negotiation between the counterparties. This also brings probably the need for bespoke pricing grids for repetitive buyers. And also, credit card might not be the right payment method to choose, because as the larger the transaction is, the more costly it gets, and we see a dramatic drop of card acceptance beyond 2,000 euros ticket size. Another element is the larger workflow for a B2B transaction. Me shopping online, there's just one decision maker. That's me, myself, and I. So I go on the page, I make a search for a sneaker or something, and I can make the decision just by myself. Worst case, I have to ask my wife if that is okay, but typically it's a very quick decision-making process. In the B2B space, we have much more stakeholders. We have the procurement department, we have accounts receivables, we have that's on the buyer side. On the seller side, we have the sales departments, we have accounts receivables, we have a purchase order process, we have an invoicing process, reconciliation, and maker-checker processes. So much longer, and this all needs to be catered for in a transaction life cycle in the B2B space. Another need is for diverse settlement methods. So that means payment methods. I alluded to a credit card being expensive, and in the B2B space, counterparties might be more fancy of having bank transfers or direct debits. So how to bring this into the overall process flow. And finally, payment terms. So buyers in the e-commerce space on the business-to-business side are increasingly asking for payment terms, something that has not been offered so much in the past, or in the B2B space. In the offline trade, we see that 60% is done on terms. And what's now the incentive for someone who is used to buy now but pay in 30, 60, 90 days? Why should he migrate to an online process where he has to pay ad hoc? So some sort of credit term offering is required in order to keep the clients to come back and repeat the purchase. So as I already said, we see the migration from offline to online sales growing rapidly in the B2B space. This has come to that 75% of the global workforce are coming from the millennial generations. They're easy, they want to buy online, they like the experience. If there's an end-to-end fully digital process, there's no one really against this. Larger ticket sizes are coming up more and more. But what's lagging is the customer experience. It's the end-to-end process, the seamless checkout process, the risk scoring. That's really something whereas in the B2B space, there's not yet as advanced as it is in the B2C space. And merchants are trying to insource some parts of the value chain from certain suppliers. And especially when it comes to credit terms, this is where then we will come in to be able to offer a solution. Providing credit terms is something that merchants struggle on their own, as it comes with certain requirements. When you want to offer terms to a customer, you need to be able to score and underwrite the transaction. You need to have a risk assessment. Do I want to offer terms to this customer? How long do I want to offer the terms? How much do I want to offer on credit? This is all quite relevant. So you have a risk assessment and a limit assessment. There needs to be a process in place to reconcile that your customers have paid you if you offer them terms. So if they pay on the spot, that's easy done, deal done. But if you have to wait for a couple of days or weeks for the money to come in, you need to be able to find out who has paid you and one has paid you. There needs to be a process for overdue customers, a dunning process, collection process, and also risk protection in case customers are not paying for insolvency reasons or fraud reasons. And to all address this, and important is that all those decisions in the online sales process needs to be quick. No one wants to log on, request credit on terms, and then waits for days until someone has made the risk assessment. So this is where then the Hokodo solution comes in, instant credit decision making. And I hand back to you, Louis, to guide us through your solution and the platform and what made us as Citi so excited about the offering.
Thank you very much, Thomas. So I think Thomas has now laid out the landscape about what is so specific about B2B payments and why the incumbent solutions like the Stripe, the Adyen's, the PayPals, why they cannot satisfy the needs of your professional customers. And essentially, imagine if you have a trader that comes to your website and they want to make a purchase worth 5,000 euros, which is a normal purchase in B2B, then they're very likely to hit the limit on their credit card. And that transaction is going to be rejected. So how do you create a payment method that solves this and that delivers the checkout experience that your professional customers expect? So let me take you through the consumer-grade experience that we've designed with Citi and Hokodo. So imagine a professional customer coming onto your website and they start filling their shopping cart as they would and as they are used to doing in their day-to-day lives as individual customers. In the background, our API will check whether that customer is eligible to deferred payment. Because as Thomas explained, in B2B, customers expect to pay by invoice in 30, 60, 90 days. That's the rule of the game. In B2C, we call it buy now, pay later. But in B2B, buy now, pay later has been around for 100 years. So that's just how people do business. So we will calculate in the background whether that transaction is eligible for deferred payment. We do this sub-second. We do it in 400 milliseconds so that the flow is all seamless. And then if the customer is eligible, and typically a professional customer is eligible in 85% of the cases, so imagine 85% of your professional customers get the option to pay in 30 days or 60 days. This has a massive impact on the conversion rate, on the average purchase size, and on the overall satisfaction for your professional customer. Once they've chosen, for instance, yes, I want to pay in 30 days, that makes sense for me and my billing cycle, then that customer gets to choose their settlement method. Typically, they would only do it once, because if someone tells you that they want to pay by invoice and do a bank transfer, this is how their accounting department settles usually, and they won't need to migrate to direct debit mandate. I didn't put it here, but some businesses, in certain industries, do like to settle by credit card. But again, credit cards are not that common in B2B. I think last week we had a transaction worth 150,000 euros. And obviously this is settled by bank transfer. There's no credit card that's going to be useful in that case. So that's it for the overall journey. But what it delivers is instant payment terms for your professional customer, and you, as the merchant, has the option to choose when you get paid. So, of course, you have the issue. Imagine all your customers suddenly start to pay you in 60 days. That's going to create a working capital constraint for you. Between Hokodo and Citi, we're able to advance the funds. And when you look at what is involved in B2B payments, we call it a bit, we use the image of the iceberg, because everyone thinks of the payment and that which is really the tip of the iceberg. It's that last bit about how we settle and move the money from A to B. But when you look at the value chain and the payment stack of B2B payments, there's actually so much more than that. What happens typically, and this is what finance teams in B2B do day to day, you have a customer that comes and purchases from your business. They tell you, well, yes, I would like to pay in 30 days. That makes sense for me. Well, then you have to make a credit decision on, do I give Mr. Müller a 20,000 euro credit line, and do I let them pay me in 30 or 60 days? That's a massive credit risk for my business. Then there's a fraud detection component, super important in e-commerce. If you have someone coming onto your website and telling you, we are Siemens, that's a great credit risk. And of course, anyone would give Siemens 1 million euro credit facility. But is it really Siemens purchasing from you? So that's another example. Impersonation risk, ID theft, account takeover. This is something that you need to handle in your payment stack. Then there's obviously paying and collecting. This part about collections, super important. We see it in B2C with the issue of chargebacks and things like that. In B2B, it's going to manifest itself as in, if I give credit terms, payment terms to 100 customers, even with the best credit decisions, some people are going to pay me late. And then I need to collect from those people. This is a massive finance operation that consumes time from your teams. There's a building block that I call insurance, which is insurance against bad debt. Even with the best collections, even with the best credit decisions, every once in a while, a customer will become insolvent. A customer will not be able to pay you. in Germany, every year, about 1% of businesses go bust. That's pretty low percentage. German companies are good payers, but still, every once in a while, there is a non-payment. Then, between Citi and Hokodo, we would protect the merchant against the event of non-payment. And that last block is the block that keeps the CFO awake at night, financing. I already referred to it a little bit. And that's, if my customers are paying me in 60 days, is there a way for me to get paid earlier? Some people might know this as invoice financing, as factoring. This is an option. And at least, in fact, a lot of these bricks are pretty modular. But that's the idea that as a merchant, I can get advance payment once an order has been made, and I don't have to wait for the end customer to pay me in 30 or 60 days. So on top of this, as you can imagine, there's a layer of compliance that we orchestrate with Citi and a lot of risk and data happening in the background. Well, that's giving you an insight into how it works. Now, what's the benefit and how does it relate to e-commerce? Well, 30% of B2B buyers have switched suppliers for improved payment terms. And it's a very simple idea. Imagine that I sell the same product as company B. We're identical in many respects. But company B offers no payment terms, and I offer 60-day payment terms to my clients. Who is going to win the business? Well, it's very easy. All else being equal, if you're able to offer payment terms or trade credit, you win the deal. And this is fundamental to the economy in B2B. To give you an idea, I don't have the stats for Germany because those are not that easy to fetch. But if I take in France, this trade credit, so those payment terms that companies give to each other, are worth 500 billion every year. And you compare it to business loans granted by banks, it's 200 billion. You compare it to factoring, it's 60 billion. So this trade credit, those payment terms that companies give to each other, is the largest source of financing in the economy. It's the life and blood of the economy. And if, as an e-commerce business, you're able to give a great purchasing experience to your customers and payment terms, you will win every time of the day. And you can move some of your marketing business budget away because just the conversions will increase massively. So I see we're running out of time, and this is also the last presentation of the day. I just wanted to highlight one customer of ours, a company called Anchor Store. They are a pure e-commerce player. They've been the company which in France became a unicorn the fastest. I think they became a double unicorn in 3.5 years. Their two biggest countries are France and Germany. And we support them in France, Germany, UK, Benelux, Spain, Italy. And what they do is they're a marketplace that connects brands and retailers. And in Europe, they help retailers, more than 300,000 retailers, procure from thousands of brands. And they're a bit like an Amazon for retailers. If you go to their website, you will see that payment terms are absolutely critical to their growth and to their proposition. And they tell retailers, come to Anchor Store, and you will benefit from 60 days to buy your stock. And essentially, they're able to buy their stock, sell it to their customers before they have to repay Anchor Store, thereby massively improving their cash flow cycle. Massive growth, and I think this is a good illustration of, a B2C grade purchasing experience transposed to the world of B2B, and a good example of what's going to happen in the next decade. So I'll leave you with those parting thoughts. What can you do to increase conversions on your website in B2B? Of course, we can always throw more marketing budget, but payment experience, customer experience, checkout is really also at the core of what can be done. And imagine if, as a business, you have 1,000 leads and you need 1,000 leads to get to 100 paying customers at the end. If you're able to double the conversion rate, which is what we see when you start to introduce payment terms, then to get 10 sales, you no longer need 100 leads, you only need 50 leads. So your cost of acquisition massively decreases. So how do you hit your targets in B2B? By really cracking the payment experience and giving that B2C grade purchasing experience. We're running out of time, but Thomas and I will be very, very happy to take any questions, of course, as a follow-up. So you have our details here. Thank you very much for the time and the opportunity.
Thank you.
Thank you very much, Thomas and Louis. Well, we still have a little bit of time for questions here. I have one
before the beer.
Before the beer, like unless you say no, let's get the questions with the beer. That would be good. But I have one practical question. How is it able to implement this? So, like, do you work together with shop systems already? Or is it like do you have any idea about this?
This is a great question. So we're like another payment method, like, imagine implementing Stripe or PayPal to your website. This is very much the same. We're an API that you integrate. We have different types of integration from no code to fully customized. And we also have plugins into certain CMS like Magento, Shopify, for instance, where it's more like, flick a switch and the payment method is available in seconds.
Nice plug and play.
Yeah.
All right, that's good to hear. So do you have clients who also like combine in their Shopify shop, for example, B2B plus B2C and offer different payment options?
Yes, that's a great question. So we actually have a lot of clients in e-commerce that have started B2C, and at some point they realized that they had 20% of their customers that were actually professional customers. So we have a lot in the construction sector or DIY companies, and they realize that they have professional builders coming to construction workers coming to procure from their website. But the problem is, imagine you're refurbishing a house, you need to buy a boiler that's going to cost 5,000 euros, your credit card's not going to work. So then they need to create a customer journey and a payment experience that supports a B2B transaction.
How do you rate the B2B clients in order to make sure that there's no fraud or like trustability in terms of payment? Maybe also for Thomas a question.
I mean, the credit scoring is done in the Hokodo platform, right? And this is they do the credit scoring, they make a risk assessment, and then there's an instant credit decision, right? And we then come in when there's a kind of a portfolio of buyers that we then finance, so that the financing costs overall are going down. Right?
The question is if there is a young company that maybe has like difficulties with getting accepted as trustable. So if there are any like restrictions or ways to assess for that as well.
Yeah. So obviously you wouldn't give the same credit limit to a young startup in the cannabis industry as you would to Siemens, but within that, yes, underwriting those companies is exactly what we do day to day. And in fact, we found out that we couldn't rely on the Schufa or Credit Reform or Experian in the UK. So we had to rebuild our own credit risk algorithms on all the individual companies. And also, once we've done that, take into account payment experience, basket data, device fingerprinting and many other factors to be able to decide whether or not a transaction is eligible. So it's very bespoke. E-commerce is very different to the other, you wouldn't underwrite it as when you give a mortgage. It's a different logic, so we had to rebuild it. Yeah.
Well, thank you very much. I think let's call it a wrap. This has been a great conclusion for a great day. So I guess it's time to get your favorite choice of beverage now, and yes. I will stick to a Feierabend beer. Thank you very much. In case you have questions, do it at the beer. And yeah, see you next year. Thank you.
Thank you very much.
Thank you very much.